Half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne with David Ingles.
Let's get to your top stories today. Stocks across the Asia-Pacific in the red, as you can see, as the Fed keeps its powder dry. Chair Jay Powell says there is no rush to adjust rates due to the economic uncertainty caused by tariffs.
Meanwhile, President Trump says he's keeping levies on China at 145% as D.C. and Beijing prepare for their first round of high-level trade talks.
Also ahead, Bloomberg reveals the White House is planning to rescind Biden-era chip curbs after getting pushback from Silicon Valley.
And let's talk about bubble tea. Auntea Jenny making its Hong Kong debut to become the third tea drink maker to go public in the city this year. We'll be hearing from the CEO, now China's newest billionaire.
Good morning and welcome to the program. We're going into the thick of the Thursday session across the Asia-Pacific. A couple of markets are coming online. We're looking at chips, of course, and we'll unpack the story in a moment here with Taiwan. As you can see, a quarter, 1% to the upside in the early goings. S&P futures are building on some of the gains we've seen of late. Although that being said, on aggregate, we're still down, as you can see, on the Asian benchmark going into today. Right, we're talking about the Fed conversation here. Slight adjustment in pricing as far as whether that's Fed fund futures or swaps going into. So slightly on the more hawkish side of things, although when you look at the pricing, it's still 3 cuts are priced before the end of the year. Flip the page, please, and have a look at some of the semiconductor plays. We are up, broadly speaking. We were up on the Philly index overnight. We are seeing some upside, as you can see, across some of the names already up and running. TSMC is just coming online. We'll give that more time, of course, to warm up. Let's have a look at how we did overnight. And the big move there was Zeekr. And we'll look at Geely, of course, as we go into the session today, really on its bid to take the company private. And as you can see, 11.5% to the upside, north of $6 billion was the deal. There's certainly a broader conversation around, the Apple story, what they announced on search and what happened with Alphabet. And certainly Biden is very much part of that broader mix, down 5% in the session overnight. Right. The approach to the open today, we did give up most of the gains going into the close in Hong Kong yesterday. We're looking also at aluminum, and we're not trading at about these levels. That's the lowest since about 2024, if not 2023, in fact, depending on which contract you look at there. Right. Pull back a little bit on the 10-year yields. We did see up 1 or 2 basis points into the session yesterday. But yeah, I mean, it's going to be busy today, on top, of course, of all the Fed conversations and how Yvonne there, of course, just willing to wait until the noise goes away from the data.
Yeah, the noise being tariffs, right? Because you're starting to hear more headlines from it this morning. We just heard from President Trump announcing that they have a news conference coming up tomorrow morning at 10 a.m. So evening for us tonight on what that potential trade deal would be with a major trade deal, they're saying, with an unnamed country. So we're not sure who it's with. But certainly that's going to dictate how the Fed's going to do in the next few months or so. You mentioned about these number of price cuts or the Fed cuts being priced in right now. We certainly saw that being dialed back a little bit after that Fed meeting and what we heard from Jay Powell. Not so much urgency when it comes to cutting rates, right? So 3 cuts in 2025. First cut fully priced in for September now. So we dialed back those bets when it comes to June as well as July. And odds of a move in July now trimmed to about 80% or so. Let's hear from the Fed chair himself, saying that the Fed is not in a hurry at all. Take a listen.
The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. There's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also, when they do settle out, what will be the implications for the economy, for growth, and for employment? I think it's too early to know that.
Right. And just shortly after those comments and the briefing taking place there, we did have Brazil hiking rates 50 basis points after 3 straight meetings of 1 percentage point, 1% rate hikes. They dropped guidance, although, on that. And of course, today we have the Bank of England and we have Bank Negara in Malaysia set to announce their monetary policy. Right. Just on the news earlier on, just to mention this before we talk about the chip story. So that news that Yvonne just laid out there that Donald Trump will be announcing this trade deal. We are getting, in fact, some market reaction already. The Aussie dollar, some cyclicals, and the Chinese currency are gaining on the back of that announcement of a trade deal to be announced with an unnamed country on Thursday, major country. Stay tuned for that. Right, now back to the other part of the story here, a Bloomberg scoop that the White House is said to be planning to rescind these Biden-era AI chip curbs towards the end, of course, of the Biden White House. The move certainly is part of a broader effort to revise the semiconductor trade restrictions. For the details, let's bring in Annabelle, who's been covering the story for us. Yeah, so what do we know so far about what might get pulled back?
Yeah, so it's essentially this so-called AI diffusion rule. And as you said, this was something that was rolled out in the very final days of the Biden administration last year. And the plan was essentially to create a three-tiered system for exports of US semiconductor technology. So you're going to have Tier 1, which was essentially North America, allies in the Asian region, so Japan, Korea, Eastern Europe as well, that would gain unrestricted access to US chip technology. Then you had Tier 3, which was the most restricted, so they basically didn't want any of it going to places in China, Russia. And then you had Tier 2, which was basically the rest of the world, where they were going to have to be meeting certain sort of targets or thresholds to then gain access to it. Look, it's had a lot of criticism. It's had a lot of pushback across Silicon Valley. There's a lot of concerns with how it was going to be implemented. It was due to take effect May 15. But what we've heard from our sources at Bloomberg is that they're going to be repealing this. It doesn't mean they're not going to be being tough still on these restricted countries, or the countries that were supposed to be restricted, China and Russia, or China specifically, essentially. It just means that they're going to be looking at a new way of doing that instead. But yes, to your point, not proceeding with this so-called AI diffusion rule supposed to take effect May 15th.
We saw the likes of NVIDIA popping some 3%. So the tech shares at least responded in some positive ways. But you mentioned, right, we're making it more simple, but we're not quite sure how it's all going to look.
Yeah, that's kind of it as well. I mean, I think when you repeal, maybe part of it is a bit of a relief, and you're sort of opening up new avenues now for negotiation. But the argument that NVIDIA would make, and that Jensen Huang continues to make, is that if you restrict US technology, it ends up backfiring, because it doesn't mean that China doesn't try and proceed with its own self-built or home-built capabilities. So essentially, yes, that is really the big question mark now, among the big question marks. But the so-called simpler rules that are going to come in, we don't know exactly what shape they're going to take just yet. We did hear from the Commerce Department saying that the Biden AI rules were overly bureaucratic, they were overly complex, they would have stymied US innovation. But yeah, it could have a big bearing, I think, in this region as well, because there's certainly a big question mark on places like Malaysia, for instance, Thailand. These are the countries that have sort of been seen as maybe the routes where China is gaining access to US technology. They're probably going to still face some pretty tough restrictions.
Yeah, and you know, the other bucket in Southeast Asia, I believe, was Singapore, Vietnam, and Indonesia.
They're the Tier 2 as well.
The Tier 2, yeah. Now, this big story here, this other story that you're about to talk about, would have been really, well, it's still a very, very big story. The shift in, I don't know, this is a longer-term shift that's taking place in terms of search and what Apple announced.
Yeah, that's right. Yeah, to be honest, I'm always happy when tech stories are at the top of the show, so there's a lot to talk about today. But this was something that prompted a big market reaction overnight, and we saw Alphabet slumping pretty significantly. So we know that the Department of Justice has Alphabet's search business in their sights, and they're saying that they've been able to illegally monopolize that. And part of that has been through a partnership that Alphabet has with Apple. There's been a lawsuit ongoing, and Apple was called to give testimony to this, or in this, throughout the course of Wednesday. And what the Apple executive Eddie Q said during this testimony was that Apple was looking at revamping or adding AI search to its browsers. So essentially, he said that last month, for the first time ever, Safari searches dipped, and that's because they're seeing perhaps a migration to AI, the AI tools that they could look to work with, so ones from OpenAI, Perplexity, Anthropic. There were some of the names that were raised. Yes, Alphabet's AI search tool or could be one of the options, but it's certainly not the front runner in the US. And so you saw that, again, one of the ones under pressure. But yes, lots to talk about today.
All right, Belle, thank you for wrapping up all for us. Tech reporter Annabelle Jewelers there. As we mentioned about these Trump lines about some trade deal, a major one that's been made with an unnamed country. Markets are starting to move along some of these news in a positive way. So we mentioned about the FX currencies, the Aussie, the renminbi. Those are gaining as we wait for this press conference, which is about, I think, 11 hours from now, of when we're going to hear it. But then you're also seeing when it comes to the Nikkei. Dave, what's going on there?
Yeah. I mean,
speculation.
So clearly, Donald Trump has not named the country that they're doing this trade deal with. Now, if you just look at the newsline, certainly markets might be speculating it could be Japan, just looking at the market reactions. In fact, the market bottomed when the headline dropped and has since reversed all of the losses. And certainly when you look at where most progress has been made, Japan is one of those candidates. Now, we're not saying it's Japan, but based on market reaction, markets seem to be speculating. It could be. Again, it's hard to underscore that the White House is yet to be very specific about which country this is.
Yeah, or maybe any kind of trade deal is good for everybody, right? It floats all boats.
There we go.
Who knows?
Yeah.
We'll continue to watch this space, but we continue on the conversation of what this means with these trade talks that we're going into in the weekend with the U.S. and China, where President Trump says he's not willing to preemptively lower tariffs on China in order to unlock more substantive negotiations with Beijing on trade.
China says in order to have substantive negotiations, you have to bring down your 145% tariffs. Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
Now, those comments came with Treasury Secretary Scott Bessent set to meet with Chinese Vice Premier He Lifeng for trade talks in, of course, very neutral Switzerland. Let's bring in Min Lo, our China correspondent, to talk us through this. So how has the U.S. been setting up these expectations for these trade talks coming up?
Yeah, we have been getting a lot of hot and cold vibes from President Trump, right? Because now he says he's not willing to lower tariffs preemptively. He previously said that U.S. actually doesn't lose anything from not trading with China. But then you have Scott Bessent saying that everything is on the table, that the tariffs are not sustainable. And meanwhile, Trump actually again denied that U.S. has been the one to initiate this trade talk, even though China had explicitly said that U.S. was the one that repeatedly reached out through various channels to China. So whether or not this is intentional on the U.S.'s part to create a sort of strategic ambiguity, to play down expectations here, certainly, markets are going to be disappointed if nothing concrete comes out of that on the weekend.
What about the Beijing side? What are we seeing in state media? How are they projecting these talks, and what are they looking ahead to?
Yes, China has been extremely consistent in their stand from the beginning. And even as they go into the trade talks, they are saying that, look, this doesn't mean that we're going to compromise. We are still going to defend our, quote, legitimate rights and interests. And their stand has been the same. They were willing to, have dialogue all along. But if the U.S. wants to fight, they're going to fight till the end. And so we have an editorial on the Global Times this morning saying that the world is now watching whether U.S. will show its sincerity, whether it will mean what it says by actually taking actual concrete steps to de-escalate. So whether or not this is sort of icebreaker talks where both sides will figure out what the other party wants before agreeing to more substantial negotiation, or will they actually, work towards something concrete? I think that's still the big question here.
Min Lo, our China correspondent there, but it's certainly something that some on the sell side have already acted on in terms of just being able to trade on this. I think BNP talked about HS Tech as being the candidate there, and Goldman Sachs, I think, raised their index targets again here for Chinese equities. Right, coming up here, we'll be looking at the open. Shanghai, Shenzhen, and here in Hong Kong, futures are flat, although the breaking news story early on might be moving the needle across some assets across the region. There's also two trading debuts in Hong Kong today, and Auntea Jenny is, of course, the one on deck as well. We'll talk more about that. We spoke with the CEO, and that is coming up in 16 minutes. This is the China Show.
Your renminbi fix just crossing the terminal here right now, and it remains solid at that 720 line, it seems. But again, the news today has been about this potential trade deal, a major one, according to President Trump, that he's set to announce in just about a few hours from now. But yes, you are seeing, though, that strength reversing a little bit, Dave, now.
Yeah, with an unnamed country announcing that trade deal on Thursday.
First of many, according to President Trump.
Well, okay, hopefully that's the case. And
yeah.
certainly we're seeing markets react to that somewhat. And might it help the Fed, which is stuck in between a rock and a hard place, really, when you look at the dual mandates there coming out of the Fed? And certainly what Jay Powell said overnight was, yeah, they're going to wait this out. What markets did was they pushed back pricing for cuts ever so slightly. We're looking at pricing, as you can see, this is based on swaps going to December. So we're still looking at 3 cuts, although we were expecting a full cut was priced in for July. That's now been priced out somewhat. Let's discuss the outlook here for global assets and really what the global economy looks like 6-12 months down the road. Rajeev Mello is here with us, Global Macro Portfolio Manager at GAMA Asset Management. Good morning.
Good morning. Good morning.
I guess let's start with what economic assumptions are you making?
Well, my assumptions are really that this uncertainty around trade and the eventual deal we get to is going to weigh on global growth and is going to be a challenge for a lot of countries, even if the U.S. backtracks, as it seems to be doing, on some of those tariff policies. The damage is somewhat done already, and that'll plague us during the rest of this year.
So you think the next move for the Fed, is that going to be a cut given some of these recessionary concerns? Or is it going to have to be more restrictive given the impact of tariffs and inflation?
That's the very difficult decision for the Fed. I would say that they're going to be on hold for the time being. I think that Jerome Powell was clear about that. But with a view that the economy is slowing and was already slowing a bit before, we're going to see cuts in the later part of this year.
You look at how markets have traded, though, since April 2nd, April 3rd. It doesn't seem we're going into a slowdown. What's going on? Why are risk assets performing well, actually, if you think about it?
Well, they had, of course, started anticipating this April 2nd news way ahead since Inauguration Day. So when we look at the full move from the top to April 9th, that was a 20% drop. Yeah. Now we've rebounded. Yeah. We've rebounded on expectations that actually the U.S. is going to backtrack, and a lot of the talk was about, well, we'll remove this, we'll exempt this. Yeah. And so the market's going back to a sort of base case where tariffs are going to be actually not too material for companies. And that's why we've seen a very significant recovery in all our risk assets, whether it's equities or high-yield bonds, or equities in the U.S., but elsewhere as well. But I guess one thing which hasn't recovered is the dollar. Yeah. The dollar is down and stayed down.
And oil.
And oil.
Yeah.
Of course, there's supply there from oil.
Yeah. So you're saying things are a little bit too optimistic then?
Yes.
Where should I be reducing my exposure then now?
Well, I think that this rebound in equity is worth fading now. Yeah. So I would start with equities, and within equities, I would reduce the U.S. Because that rebound has been really quite tremendous. It did reflect also good numbers coming out from the earnings we've seen in the last couple of weeks. That's been good, better than expected. But we've seen guidance from the CEOs looking very uncertain, some removing guidance. So they are worried about that.
Yeah, CEOs have been removing guidance. Central banks, excluding maybe the Fed and a few others, have been dovish and said, the Bank of England's coming tonight, they're probably going to cut interest rates again. Are those the places to be in terms of fixed income, for example, where it's more clear-cut as far as the easing cycle goes?
Yes. Of course, a lot is priced already in fixed income. As you mentioned earlier, about 3 rate cuts are priced. And central banks are going to grapple with this uncertainty and probably cut maybe later. But yes, I do agree that it would generally be fixed income. And then, of course, we have this other factor which is confusing for investors, is the steepening of the yield curve. Yeah. So where in fixed income you are matters a lot.
You mentioned about the dollar and how it continues to fall in some ways. Is there further free fall, you think, or fallout, I should say, given what we saw with the Taiwan dollar? Some say that's a very Taiwan story, given what life insurers and their exposure to the dollar. But do you see more fallout from this kind of dollar selling?
Yeah, maybe just to add to that, too, the dollar story, too, you mentioned fixed income. Does that include treasuries or not include treasuries?
Yeah, okay, so start with the dollar. Yeah. The broad dollar has been in a sideways range now from that early April sell-off. The sell-off was massive then, and then we've sort of stabilized. Positioning went extreme. Markets now with all the algos and all, really moved from one end to the other. So now positioning is cleaned up a bit. And I think the longer-term investors will continue adjusting their hedges. And so on your Taiwan question, I think the life insurers and the way they had to sell and increase their hedge ratio, that means that they own U.S. assets and have to sell dollars forward to cover some of the currency risk. Not all, but quite a bit. And that's increasing. And I think it is a sign for other institutional investors as well to have to move. The Taiwan insurers really could rely on the central bank to keep the dollar stable. But the U.S. doesn't want to see countries intervening to support the dollar and to weaken their currencies. Just doesn't want to see that. Puts them on the monitoring list, puts them under significant danger. It's not only Taiwan, but there are many other current account surplus countries in that same position.
So the advice is, you say, to a strategic allocation to India, Japan, and Korea. Why those three markets?
So within the region, once the Indian geopolitical story is waning once again, India becomes attractive because it's a large domestic market. It can rely on its own growth without depending too much on what's going on outside. Yes, every country does depend, but India is a large country. Plus, India has probably a very good relationship with Donald Trump and his team. And so I would expect India to be able to get some kind of deal which is also favorable. So that's one. And Japan, because Japan also is close to the U.S. It's a military ally. It's in a strategic position. The Japanese are doing everything that they can. We've seen the yen appreciate. I expect the yen to appreciate more. So that's going to help global investors for their returns in Japan. It won't only come from the equity side by itself, but also from the yen side. And then South Korea, South Korea's got beaten up a lot domestically and all. But as I expect a realignment of currencies, with the dollar weaker and Asian currencies stronger, including the CNY, I think the won will benefit as well.
All right. We'll have more, Rajeev, with him. Rajeev Mello there, Global Macro Portfolio Manager at GAMA Asset Management. You take a look when it comes to what's been set up for the open here today. We talked about that headline, right, from President Trump. There's a major trade deal that's set to be announced. We don't know who it's with. But then again, markets are moving here this morning. The Heng Seng pre-market, though, we are still slightly down by 0.5%. Plenty more ahead. This is Bloomberg. Live pictures out of the Hong Kong Exchange of the Auntea Jenny listing. We mentioned it's one of two that are happening here today. And yes, that gong ceremony about to start. We talk about this tea market that's just overflowing with lots of competition, right? So we'll see how this plays out here today. But yes, this is a $35 million IPO, a listing price of $113.12. That's the top of the range as well. And that valuation, Dave, just makes this couple that owns it, husband and wife, new minted billionaires.
That's nice for them. Right. Do you drink bubble tea?
Oh, yeah.
Yeah? You like it?
I could do it every day if I could.
Less sugar, like what's your preference? Less sugar, less ice?
You need the less sugar, like mei tang and xiaoping, little bit of ice.
There we go. the Goldilocks prescription.
And I keep it traditional, just milk tea boba.
Just a milk tea boba?
Don't go too fancy, yeah.
Okay. It's looking like it's going to be a very busy day, so I'll need maybe some caffeine if I could tell maybe our friends here on the floor.
Yeah.
A shot of caffeine or espresso would be nice. Given all the news flow coming through, Donald Trump talking about an unnamed country, a trade deal there. Separately, Taiwan is saying the U.S. did not pressure Taiwan on appreciation there. So lots are coming together. This is Bloomberg. Good Thursday morning. Welcome to the program. We're going into the opening bell today. Live pictures out of the Hong Kong Exchange, where you have two trading debuts today. One is ticker 2865, Hainan Drinda New Energy Technology. The other one is Auntea Jenny Shanghai Industrial manufactures and distributes beverages. There we go. Auntea Jenny, and that banging of that proverbial and literal gong coming through in a couple of seconds.
Yep, there you go. We're going to have the interview with the CEO coming up with our Mello. So certainly that's one to watch as we count down to, yes, another tea drink company.
I'm losing count.
Yeah, losing count. There's too
How
many
do you
out
need?
there. I mean, you can never have too much, I guess, bubble tea.
So.
But there you go. There it is. Let's listen in.
Okay.
The double gong.
Yes, that's what happens every time Yvonne and I enter the office, actually.
We need a grand entrance.
Yes.
Every time. We're
Pick
kidding.
me up. Yeah.
We're not divas. No. Okay, here you go, though. There you go. There's 2 debuts there. We'll track that for you, how things go for the rest of the day. But the opening initial reaction to the China markets is lower this morning. Take a look at how onshore markets are doing. We're down about 1/3 of 1% on the CSI 300. That's despite what we're seeing in the currency markets, right? There's a little bit more optimism around this potential trade deal that Trump has made with an unnamed country on Thursday. So certainly that's one thing to watch. But we are seeing, when it comes to Shanghai and Shenzhen, some moderate downside here this morning. Keep in mind, though, you have the likes of Goldman. They trimmed their forecasts or targets just a few weeks ago, I would have to say. And now they're kind of trimming them up again, right? So that's one sign that maybe things are getting a little bit better. BNP Paribas also talking about that the way to catch up on this rally is through the HS Tech. That these tech shares are going to actually be the beneficiaries of what sort of trade deal that comes out from the Trump administration. There you go. Hong Kong's looking like this here right now. We talked about those 2 trading debuts. Certainly the optimism around trade deals, we're not quite seeing that here in Hong Kong either. 8 shares are flat. If you take a look at HS Tech, also slightly lower here, but it's pretty quiet. And really the Fed didn't really do much for markets either. But you are watching the likes of Baidu. That stock is down some 2.5% or more, following what we saw in the U.S. session, Dave. Yeah,
quite a big drop there, 4 or 5%, I believe, in the U.S. listing overnight. Yeah, the separate story that we talked about, I think it's a big one that Bell, our tech correspondent, highlighted earlier on, the shift in how people conduct search. And Apple talking about how it's this shift from just the Googles of the world to just an AI-powered one. Right, the trading debuts today, one is doing okay. The other is Hainan Drinda, as you can see, 0.25% to the upside, 56%. I think this one was massively oversubscribed in the retail front. And we will, later on, you'll hear from the company itself and what they plan to do with the money. It's an extremely competitive market where it's margins and everything else. And, it's almost like your convenience store analogy when you look at how proximate the stores are to one another. Right. Let's pivot back and have a look at 24 hours ago, live briefing, financial officials laying out additional stimulus to support the economy. What does it mean for markets here? Rajeev Mello is still with us, Global Macro PM at GAMA Asset Management. What's your take, the appropriate exposure to China these days?
Well, I remain constructive on China. I think there was a strategic element to announcing the 10 measures yesterday ahead of the negotiations with the U.S. over the weekend in Geneva. So they did announce measures. There was some monetary easing. 10 basis points. I was a bit disappointed by the 10 basis points and the limited other measures. They made for good headlines in the direction. They were earlier than expected. They were before these negotiations to show the U.S. that they don't need a deal. Absolutely, they can do things. But I think they can do more. And I think they're reserving some dry powder to do more if the negotiations don't work out. They can easily do much more than 10 basis points.
What's going to drive this market further? Is it still about whatever trade headline we get about a potential deal, or is it going to be what the economic fundamentals of this economy?
Well, both are very closely linked, right? So I would say economic fundamentals really drive markets. The problem is that when you have such a high tariff, and even if you reduce it in negotiations, it's still going to bite. And it's going to bite a lot of companies which are listed and a general business sentiment, as we're seeing worldwide. So, yes, that's the thing. That's also the hard and soft data. We saw strong hard data for Q1, finally. Yeah. A lot of front-loading, a lot of inventories being built. But the Fed took it positively yesterday as well when they said, oh, it was resilient. It's really going to depend on these tariffs.
The bond the fixed income story in China is, one where yields couldn't find a floor. I mean, arguably with the announcements yesterday, do you still think, do you think that we have a lot more room on the downside to go on CGB yields?
When the policies are effective and really kick in, then CGB yields will start to stabilize and rally, go up. So since I'm kind of optimistic that China will do enough to support growth, I do think that they've hit the floor.
It's the opposite, okay.
We've been talking about what we heard from Taiwan in the last couple of minutes, saying that they didn't face any pressure from the U.S. When it came to that appreciating currency. What about when it comes to China, though? The CNY, do you think that's going to be a big factor in these trade negotiations?
Yes, I do think so. I think that a bit like my playbook is what happened between the U.S. and Japan back in the mid-'80s in 1985. The U.S. put pressure on Japan to appreciate its currency against the dollar, to weaken the dollar to help the U.S. trade deficit. And I think the U.S. will try to do the same thing with China. China will be much more resistant, but at the same time for China, between tariffs and no trade and a stronger currency, which shows strength as well, I think China will edge to a stronger currency.
What seems to be the takeaway from our conversation is the clearest play is that the economy is not going to do well globally. Where things are more uncertain is on tariffs and what happens with China moving forward. If you could reiterate, how do we play this defensively then? And, especially with gold still holding at fairly elevated levels, what is a defensive portfolio this year?
Yeah, but a defensive portfolio for me is somewhat underplaying the U.S., which is, you had really very large allocations for global investors, diversifying into other equity markets as well. EM equity markets are going to benefit from lower policy rates because a weaker dollar and the Fed, which is eventually going to start cutting rates, is actually good for EM. And many countries, whether it's in Latin America or in Asia, will be able to lower rates, and that will support the equity markets as well. So I consider that somewhat defensive, which is paradoxical because normally EM's not a defensive play. But I think also the fixed income markets outside of the U.S. And in the front end of the U.S. curve are defensive as well. So in my portfolio, that's what I would have. Now, gold, I'm a bit challenged with gold because the rally's been already so strong. And central banks have been buying because they've been diversifying reserves. But it's reached very high levels, and I think it's 3,500 is going to be a major level to breach. And I think I wouldn't increase gold now.
Rajeev, great to have you here. Rajeev DeBello, Global Macro Portfolio Manager at GAMA Asset Management. Let's move on and talk a bit more about EVs. We're talking about Geely now, is offering to take its premium EV brand Zeekr private. Now, the move is part of billionaire Li Shufu's strategy to consolidate and streamline his business empire. Let's bring in our Asia transport reporter, Linda Liu. She joins us now with the details. And maybe what's the whole rationale behind taking Zeekr private?
Like you said, billionaire Li Shufu is undergoing this big consolidation drive for the Geely empire. But I do have to say the move was a big surprise because Zeekr only listed on the New York Stock Exchange 1 year ago. And at the time, it was the biggest Chinese company to list in the U.S. for several years at that point. So to do this after only 1 short year on the U.S. Stock Exchange, it's a bit of a big shakeup. And but now Geely is facing a lot of competition domestically. You've got big rivals like BYD that's just dominating the market. So they're probably looking to shore up resources to help it better come up with new models, new strategies to take on the competition, and at the same time kind of refocus on their main core brands. So that's the Geely brand, the Zeekr brand, all integrating into this united front.
Staying on the EV front, Tesla and numbers again continue to fall in China. What do we know?
Yes, Tesla's China numbers comes after Tesla also reported pretty bad results in Europe, where key markets like France and Germany also slipped. In China, the picture is a little bit different because politics don't play into, it's not a big factor for consumers, what Elon Musk is getting up to with Doge. But it does say that Tesla is also facing a lot of other competition, especially considering their lineup in China. is relatively old compared to all of these new models coming out. So Tesla also has a tough time in the China market.
Linda Liu, our Asia transport reporter there with the latest on all things autos. We're taking a look at when it comes to Taiwan. So the central bank governor has been speaking to lawmakers here and talking a little bit more about what's been going on with the Taiwan dollar, maybe putting a little bit more, I guess, clarity on what's going on. So one thing he said was Taiwan reiterating that the U.S. did not pressure Taiwan in the Taiwan dollar appreciation. So maybe it's not part of those trade negotiations and playing down those speculation out there. He reiterates that the strong Taiwan dollar is due to market expectations, and they are confident that Taiwan will not be labeled as a FX manipulator by the U.S.
Yeah, if I could ask my producers to bring up as well, because this really goes into the broader trade conversations taking place, and I think the headline coming through, can we get the U.S. futures up? The Nikkei and also the topics and the Taiwan index coming up as well. You know, before the show started, Donald Trump said that there was a trade deal that he was going to announce with a major economy. We don't know who that is. It's coming, I think, later today. So the markets are speculating which one that is. And it's worth pointing out that the Japanese have been speaking with the Americans. The Taiwanese have also been speaking, I believe, on Monday. And if I could quote Alicia Garcia-Herrero out of BBVA, I posted on LinkedIn a few days back something on the Taiwan dollar and the market moves we've seen. And one of the comments she said on the comment section of my post was, well, guess what? Taiwan and the U.S. are speaking right now. So it's unsurprising we're seeing the dollar weaken as those trade negotiations are taking place. So it's anyone's guess.
Keeps us guessing. Keeps us on our toes.
No, that's why we have a job.
It builds a suspense.
There we go.
As we go down to
markets
the
like it, though.
They certainly do. We've got plenty more ahead. This is Bloomberg. Well, China's milk tea boom has brewed up more billionaires with the trading debut today of Auntea Jenny. There you go. Shares popping some 51%. Their opening share price gives husband and wife founders Shan Wei-jun and Zhou Rongrong a combined net worth of, get this, $1.1 billion. Shan told us more about their plans for expansion.
First, we will strengthen our supply chain to make sure our products are better and cheaper. Second, we want to open more flagship stores at the prime locations of core business districts to gain more visibility of our brand. Third, we want to expand into overseas markets. We have launched about 30 stores in Malaysia. We also have expansion plans in the US, Australia, Korea, and Europe in the near future.
When it comes to your domestic expansion plans, what are your targets in terms of how many new stores you're opening? Which regions are you focusing on?
In terms of domestic expansion plans, we focus on quality instead of quantity. Otherwise, it's not sustainable. That means we focus on two parts. First is our customer. We want to deliver affordable, delicious products with good services. On the business side, we want to provide a competitive profit model for the stores. By doing these, customers will keep buying our products, and our franchise partners will open more stores.
But given the broadly weak consumption sentiment now, how would that affect your sales forecast this year?
We actually sell two products. One is fruit tea products, and the other one is a business model for small-scale restaurant entrepreneurship. When people lose jobs during economic downturn, they will find the tea beverage industry is an opportunity that requires a small investment and has a short payback period. They can change their fate through hard work. I believe under these circumstances, people's entrepreneurship enthusiasm will only grow stronger.
You're planning to open a store in New York in mid-May. Given the geopolitical risks, are you not worried that that could weigh on sales, and how do you plan to win over local consumers?
Starbucks has entered the Chinese market for almost 3 decades, making tens of billions of sales revenue. Chinese customers gradually accept coffee, even though we have a long-standing tea culture. Similarly, we believe Western customers will also accept Oriental tea. Secondly, the Taiwanese-style bubble tea has come to Europe, the US, and Latin America for several decades. There are plenty of stores in those markets. Thus, it is a product that has been validated by the market.
That was Auntea Jenny, co-founder and CEO Shanwei Jun, speaking with Min. Of course, just going into the trading debut today. Shares are doing quite well, is an understatement. Plenty more ahead. This is Bloomberg.
Welcome back to the show. A top Singapore diplomat has warned there's no clear roadmap to improve ties between the U.S. and China in disputes over everything from trade to Taiwan. Ambassador-at-Large Chee is a former envoy to the U.S., and she told us the speed and scope of President Trump's policy changes has been a shock.
President Trump candidate Donald J. Trump ran on the promise of disruption. And he laid out all the policies that he said he would do. And he did exactly that. But still, I think most of us were shocked and some were awed. Why? I think it's because of the speed in which things have happened, the speed, the scope, and perhaps the extent. And that has really surprised everyone.
If you take a look at Europe, it is building its own defenses, it's increased its defense budget, for instance. If you take a look at South Korea, it's thinking about going the nuclear way. How are you looking at whether or not these countries will undo the measures that they're adopting at this point in time?
I don't think many of America's allies and partners see America as a foe, even though they are very uncomfortable with what the United States, the policies seem to be portending, the tariff war and so on. What do countries do? They try to bargain, talk their way out, see whether you can land at a different space. Because President Trump has been unpredictable, there's reciprocal tariffs and he pulls it back 90 days and so on. So the question is, in the end, who is the target? Are all these countries target, or is it just targeted at China? And countries are doing different things. But it is true, you are right. In terms of defense, President Trump has in fact indicated that he wants to deconstruct the order that America has created, that countries should not expect a free ride on American defense and assistance. And in a way, we have been free riding, so countries can expect to pay more. I think that will happen. And so there's some adjustment there. But I think you'll see hedging. They're not foes, but they'll hedge. They hedge in different ways.
You talk about hedging. Does hedging involve getting closer to China? Have you seen that? Do you expect that?
Hedging will, countries at the moment is only 100 days. All right, and people are
quite a good indication of what can be expected in the country.
Yes, I think but there are many countries that are still just trying to deal with the tariffs immediately. They haven't moved to the next phase yet. So, and it seems now, if you look over the 100 days, the countries that dealt or are dealing with President Trump, the United States, with some calm and in a collected, poised way, seem to be having some effect. Show strength and you'll be respected. So there's a bit of that. If you look at the cases, Mark Carney, Claudia Sheinbaum in Mexico, so countries are remaining slightly calm. And President Trump, he listens and sometimes he changes his mind. So that can happen, So coming back to your question, then what will they do, So I think in terms of whether they will move towards China immediately, there are signals. China is talking to Europe. Europe is talking to China. what I think has changed most is that what President Biden did, which was to collect all the countries in Europe, gather the Europeans in a kind of coalition, a loose coalition, to balance China, to counter China. I think Europeans are now not going to go there.
There we go. That was the Singapore's ambassador at large, Heng Chee, speaking with Haas, of course, at our New Voices 2025 event. Just very quickly, okay, a couple of things taking place right now this hour, important ones. The BOJ, we're looking at live pictures right now. They're speaking with their lawmakers. They're talking about how they could raise rates if the outlook is realized. It's worth pointing out that they had to sit on rates and they've had to do some adjustments as far as the growth outlook was concerned because of the uncertainty out there. It's a moving part that they had to deal with, that the Taiwanese also had to deal with separately, and they're talking about a stronger currency there as well. And that goes into the Taiwan dollar, too.
Yep, so Taiwan dollar, we certainly heard from the central bank governor speaking to lawmakers also in Taipei and talking about how, they did not face any pressure when it comes to the Taiwan dollar appreciating from the U.S. So certainly that goes to show maybe it can bring down some of the speculation out there, but he says it was based on market expectations as to why the currency has been surging. On a separate note, we're getting some news now. New York Times reporting that perhaps the unnamed country that President Trump says he's made a major trade deal with is the UK. So they're saying the Trump administration to announce a trade deal with Britain. You're seeing the pound reacting to it now, and we are seeing it strengthening this morning. Yeah, I'm also looking at FTSE futures, which are also catching a bid. And it's worth pointing out the timing of this, really. You look at the pound on the way up, pound crosses, as you can see, some strength coming through across some, not all. We're still lower. Do we have a pound against the euro, please, if we can as well? It's also worth pointing out it's Bank of England Day, right? Yeah. So the timing on when that announcement is taking place based on timing given by the U.S. president, I think the Trump social post is coming up on your screens very, very shortly, is, I think, a few hours after the Bank of England decides on rates. The consensus is they're going to cut. Our folks at Bloomberg Economics think the focus on the split will be 8-1. So look at the split, look at the commentary, and look at the outlook and how they say it and how this maybe improves the outlook, because certainly the economic calculus has changed for the Bank of England since they last met in March. We'll keep on top of the story, plus other things as well coming through here. The second hour of the China Show is just ahead. Welcome back to the China Show. Here's a look at the HSI half hour into the session. And of course, we continue to see a bit of optimism in these markets here. We're up about 0.5%. 8 shares are doing a little bit better at 0.75% to the upside here. You talk about what we've been hearing the last hour, and so it really has been what we've been hearing from the president of the U.S., Trump, and the administration to announce a trade deal, a major one. New York Times in the last few minutes reporting that major trade deal with an unnamed country is, in fact, the Brits. So we are seeing the pound rally along with some of the pairs there. So certainly we'll watch that space. But, yeah, that certainly is the key narrative here this morning. It's not really about the Fed at all, Dave. No, I was about to say just the progression of events going into our shows today. The Fed was our top story, tech as well. We're no longer talking about the Fed. Certainly the Fed is a conversation piece on the uncertainty out there. And little by little, does this actually help the case? Little by little, do we get more progress on these individual trade deals? If you're a multinational, though, the big one you want to watch out for is really China, right? Because it affects most supply chains and really how those effectively land as far as the tariff boundaries are concerned. Now, just to note as well as Yvonne's point, the pound is gaining. With the exception of the Aussie dollar, it's up against everything as we speak on that Times report that it is the UK where the treaty will be signed later today morning if you're watching us out of the East Coast in the U.S. on Thursday. All that said, it's interesting because we're coming out of the Fed. We have a couple of more central bank decisions to get through in Malaysia. And then we had the Bank of England coming through later today. S&P futures are liking that, as with Stocks 50 futures and FTSE futures 100 are now
up about half of 1%. We were trading around a third of 1% higher, so incrementally slightly higher in that. And if it does look like Asia is on the losing end of this, just to caveat in context there, we were down as much more early on. So we have erased and reversed most of the losses in the Asian session following all the positive news coming through on the trade conversations coming. The big one, of course, is as it pertains to China, of course, which is on the weekend. We'll get to a preview of that in just a moment there. Right, for now, let's bring in Mark Cranfield as we digest this news. And Mark, just your initial thoughts on this and how much it's positive, certainly, but is it positive beyond just that channel between the UK and the US?
Yes, all the Bank of England members are currently tearing up their notes for today's meeting because they were coming into it expecting that they would be like Jerome Powell, that they would lower interest rates and give a very dovish outlook for the future because they were very concerned about the trade tariffs coming down the pipe. And now there's potential for a trade deal between the UK and the United States. It probably wouldn't stop them from lowering interest rates today, but it will definitely affect their outlook. Traders were coming into this fully expecting that the Bank of England will outline several more interest rate cuts to come in this cycle because of the headwinds that will be from a global trade war. If it's going to be a trade deal for the UK, that could change the picture dramatically. It will have to come into the Bank of England's conversation. It's going to be a very spicy day for the pound. It looks as though it's going strong into the European session. The Bank of England decision will affect it, and so it could reverse course completely, and then depending on whether or not it really is the UK who gets the deal, it could reverse back the other way. High volatility for the pound today.
Mark, it's still going to be about FX, I'm guessing, given these headlines we're hearing on Taipei as well. The Taiwan Central Bank governor is saying that they did not face any pressure from the U.S. when it came to that appreciating Taiwan dollar. Where to next for that currency?
They're in a very difficult spot here. Of course, they want to try to convince their own people, especially. They want to convince their own companies, their own investors, that they are not under pressure to do a deal based on the currency. Because you can see what's already happened. People were speculating that the Taiwanese dollar was being used, and they've driven it to a very strong level over the past week. But the bigger picture, anyway, is that as we ran a story yesterday that Stephen Jen, who's famous for the dollar smile, he's talking about Asian institutions having built up more than $2 trillion that could be shifted out of the US dollar back into their Asian currencies. That would include Taiwan as well. So the big picture certainly is that dollar is moving to the downside. The beneficiaries are especially based in Asia. That would include the Taiwanese dollar. It will include the Korean won, Singapore dollar, even the Chinese yuan to some extent as well. Taiwan really don't want to expose their exporters, their life insurance companies, to too much FX risk. They want to dial back as much as they can. But even their efforts will be limited because the big picture is coming from the United States side. Uncertainty there is leading to a weaker US dollar that pushes up all global currencies.
Yeah, and Mark, I wonder now if this opens up further room for central banks in the region to lower rates even further. We had Malaysia today, we had the Philippines mentioning this week because, we had inflation coming in near 1%. We know how oil prices have done. We know how oil prices are probably cheaper right now in those respective currencies. So it's almost a dividend, and it does open up the door for lower rates ahead. Just your thoughts on that broad thesis?
Actually, it slightly lowers the pace of future rate cuts. If the currencies start to perform well, that is also a sign that liquidity is moving into Asia. More money coming into the short end of money markets, into equity markets. The central banks will be able to use that as a kind of a stimulus anyway. So investors can assume that if that hot money is coming, the central banks can sit back slightly. Doesn't mean to say they won't lower interest rates, but probably at a slower pace than they may have been thinking. They would, at the moment, they may have been thinking the trade war is so bad, it's coming at us very fast. We need to get ahead of it. We need to boost our economies. They may not need to be so quick if global funds are shifting to Asia, supporting their markets anyway. That's doing part of the work for the central banks for them. But of course, on the other side, they don't want their currencies to get too strong too quickly. So you can expect more jawboning in the same way that you've seen from the Taiwanese central bank this week.
Mark, thanks. Mark Cranfield there, our Bloomberg M Live strategist, joining us out of Singapore. And in other central bank news, Brazil has increased its key interest rate by a half point to 14.75%. Now, the highest level that we've seen since 2006. Policymakers are working to tame above target inflation while also seeing a worsening global economic outlook. President Trump's trade policies have prompted the real to appreciate over the past month and also tamp down global commodity prices.
Right. Now let's look at the Bank of England, which I think the caveat here is the news over the last few minutes or so from the New York Times might affect how the voting or the guidance looks like. But for now, what we're looking at is the Bank of England is expected to still cut interest rates 1/4 point at later Thursday. It may signal another cut in June. That's as, in the current settings, are still that the U.S. trade war darkens the outlook for growth. Now, just a background here, the bank has lowered its rate 3 times since August and has been on hold since about a few months back. Right, coming up here on the China Show, we'll be speaking with cross-border payments platform, and this is interesting because it's a trade and tariff conversation as well here with John Caplan. We'll be talking about the company's results. They put out their results as well, their plans in China, and yeah, the drop in the stock price as the company withdrew its guidance for the year, citing economic uncertainty.
All right, we are checking shares of Payoneer. This is a 2-day chart here. This is the cross-border payments and financial platform. The stock basically plunged after the company pulled its outlook guidance. That followed adjusted earnings for the first quarter that did beat the street. Now, Payoneer works with e-commerce firms, including Amazon, to help small and medium-sized businesses sell into global markets. Joining us exclusively now is John Caplan, CEO and Director at Payoneer Global. John, it's great to have you on the program. First and foremost, maybe it's a chance to talk to investors after those earnings came out and the reasoning behind pulling your guidance.
Yeah, it's great to be here. Payoneer delivered a very strong quarter. And what we showed is that our profitability and innovation really can grow hand in hand in an uncertain economy. But the uncertainty of the global tariffs and the trade conflict is so acute that what we wanted to do was provide transparency to investors around the world about a few important numbers. One, if the current trade environment continues, it will have a headwind to revenue, and we tried to dimensionalize that for people. 35% of our revenue at Payoneer is China-based exporters using the Payoneer platform to sell to the world. 20% of our total revenue is China to the U.S. corridor. And we are very focused on, as global supply chains shift and sellers diversify beyond the U.S., Payoneer is right there helping them grow in every direction. And we're building a platform across 7,000 corridors. We have customers in 190 countries and territories, services companies, e-commerce companies, goods sellers, all using Payoneer as their financial stack to participate in global trade. So while a day like today is not a lot of fun, it is really important that investors see how transparent we are, how confident we are about the long-term opportunity, despite some of the near-term uncertainty that's roiling the markets more generally.
Yeah, John, David here, and a pleasure to have you on the show. I mean, to your point, it did overshadow the earnings that you guys put out, and I just wonder what would it take to reinstate the guidance? Do we need final certainty on these trade negotiations, or do you see a possibility of being able to get more certainty on your business even before the powers that be figure things out?
Yeah, well, we don't want to get ahead of ourselves for sure. But what we've done is we deal in the facts business. And the facts right now is, there are prohibitively large tariffs on goods traveling between China to the U.S. We've seen a lot of the data about shipping and logistics firms talking about fewer cargo, less cargo coming to the U.S. We've seen big retailers in the United States discuss empty shelves midsummer if the trade conflict isn't resolved. But again, our responsibility to shareholders is to really dimensionalize based on the facts today, not based on speculating what might happen. We're hopeful that this conflict can resolve. But what's most important for our business today is how global we are. We're helping 40% of our revenue doesn't touch the U.S. at all. It's goods sellers from China selling to the Middle East or to Latin America or Europe or around the world. It's services companies in the Philippines doing business with people in Germany or in Latin America. We are a very everywhere to everywhere company helping small businesses around the world really participate and compete. And one thing I know is entrepreneurs are ambitious and they're driven and they're creative and resilient. And the world's small businesses, I think, will lead the way in, sort of the next generation of trade. Payoneer wasn't built just for the old model. We're positioned well for the new one.
John, you mentioned a fifth of your annual revenue comes from these China-based sellers that want to sell their products into the U.S. What have you seen so far in the data? Maybe since April, since we heard about these tariffs. Has there been hesitation from some of your customers in wanting to expand to the U.S.? And how are they weathering these sort of risks?
So one of the things that's remarkable about the entrepreneurship of China goods exporters is how creative they've been in capturing the buy box in the U.S., in providing high quality, low cost goods. And they don't want to walk away from the U.S. Actually, they're very focused on pulling as much cost out of their products as they can to continue to capture the U.S. consumer, which is 43% of global consumer demand. But at the same time, they're really focused on expanding more to Europe, more to the Middle East, more to Latin America and Australia. And in some ways, this trade conflict is a forcing function to the entrepreneurs in China to really continue to diversify where they sell, diversify their supply chains. And Payoneer stands to benefit from that diversification. As you know, China, 85% of Chinese exports go to the rest of the world, don't go to the U.S. And I think that positions the Chinese small business manufacturer of high quality, low cost goods well to really continue to drive growth and value for them.
And John, the recent acquisition of EasyLink payment, does that fit? Is that the way that fits into that puzzle? Just help us understand the rationale and how, what is the vision for this specific asset?
Yeah, so one of the things about our business is we are regulated around the world and trusted by regulators and governments and bank partners. And we are the third foreign company to receive the license. We bought a business in China, as you say, EasyLink, closed just recently. We're really gratified that we have this license. We see it as an important part of the building blocks of our global licensing framework to provide support for Chinese entrepreneurs as they continue to drive innovation and participate in the global economy. We talked about in our prepared remarks at earnings today that we've applied for a similar license in India. We're working on other markets around the globe as we continue to build a moat around the Payoneer franchise, which is our brand, our relationships with banks, our over 2 million customers, our nearly $1 billion in revenue, our strong growth and profitability. We are an advocate and ally of the world's entrepreneurs who are participating in cross-border trade.
And you are entering into this market in China, John, with, I guess there's two very big established players, right? I think about Alipay, I think about WeChat Pay. How do you go about in competing with these big players?
Those are wonderful companies with incredible innovation. In a prior life, I worked at Alibaba Group and had the chance to learn from the creative entrepreneurs that lead that firm. We think we are uniquely positioned to support global exports for China-based merchants, just like we are for merchants in India or Brazil or Turkey or Morocco or 190 other countries and territories. We think that there's enough pie for all of us to eat. We are very focused on one thing. That's the small business cross-border entrepreneur who's sourcing talent and raw material and customers over their borders. We are, an advocate of the borderless entrepreneur. Those people turn to Payoneer. When we host events in Shanghai, thousands of businesses come to a Payoneer event. The world's marketplaces turn to Payoneer to identify the best exporters, the highest quality goods. We are sitting right in the middle of that trade and well positioned to continue to grow in the ecosystem.
John, it looks like things are going well, I guess, with the exception of the uncertainty out there, and certainly not through any fault of your own or others that have pulled their guidance. So apart from that, is there any specific risk that you're looking to mitigate and manage moving forward as the business grows and you continue to hopefully realize many of these licenses and expansion plans across the world?
Yeah, I mean, over the last 2 years, our revenue's grown 42%. We've driven core business profitability significantly. We've held our expenses tight. Our revenue's growing just about twice the rate of expense growth. We have a really solid plan and a great team around the world focused on helping businesses grow. The risks are macro. Inside the business, we're executing really nicely, getting great results, and just are, when the world's uncertain, we're focused on our customers. We celebrated our 20th anniversary 10 days ago or so. It was deeply inspiring to talk to entrepreneurs from Shenzhen and from Manila and from Colombia and just about everywhere across the globe, to hear them describe, while there may be macro uncertainty, it's driving their innovation and creativity to grow their businesses. And for us, there's nothing better than serving people like that.
John, final question for you. The Knicks won, I think they took game 2. Final question. Are they going all the way, you think?
It is. I have to tell you, watching the China show and a Knicks basketball game is pretty much a perfect evening for me. I'm thrilled as a native New Yorker to see the Knicks pull the second game of the series. They're coming back to MSG for Saturday at 3:30. We'll see how we do then.
Yeah. Okay, yeah. We won't tell our friends in Boston that. John, fantastic. Thank you so much for taking the time to speak with us. John Caplan is CEO and Director at Payoneer Global, live for us there out of, if that's obvious, in New York. Plenty more ahead. Welcome back to watching the China show. Tourist arrivals to Hong Kong jumped in the first quarter, boosted by efforts to repair an image dented by COVID and political turbulence. Hong Kong's Tourism Board is forecasting a 10% growth in arrivals this year, and we spoke exclusively with the city's tourism secretary about the challenges ahead and how they're attracting non-Chinese visitors.
I actually see pretty handsome increase of visitors from outside of Asia, or within the short haul of Asia. For our long haul, which primarily means a flight more than 5 hours for the long haul visitors, we see double-digit growth last year and this year, 31% growth from Australia. I think close to 20% growth for the US and the UK, for example. I think these are signs that people are actually still traveling, and with the resumption of flight capacity, the subsequent or consequential drop in air flight ticket fares, and also the fully operational free runway system of Hong Kong, actually we see that our overseas visitors are coming back.
Are you doing enough to attract those non-Chinese visitors?
We are doing more and more, actually. The Hong Kong Tourism Board has been doing quite a lot in these ASEAN countries. I actually just now led the delegation to the Middle East. I went to Dubai, Abu Dhabi, and Riyadh, and we were doing a trade delegation visit to the Arabic travel market. And I think we are keeping and increasing our work in the traditional markets. There's no question about it. We are also exploring new markets. So the figures actually speak for themselves.
What are you doing for the U.S. market?
The U.S. market...
Because there's threats that perhaps those Hong Kong trade offices might be closed. We all know about the trade war.
Well, we are doing nothing to the U.S. We maintain a zero tariff, separate customs territory, a founding member of the WTO. We have not imposed any
reciprocal tariffs.
Reciprocal tariffs. I don't know how reciprocal that is, because Hong Kong adopts zero tariff. So we're doing nothing. We basically did nothing to undermine any of it. On the other hand, we actually welcome everybody. Hong Kong store is always open. And you can see for yourself the increase in visitors from the United States. You can see that Hollywood movies are now still being staged in Hong Kong all the time. Even when we are faced with different threats of tariff or other things, Hong Kong remains a free port.
What is your main number one priority to achieve this year? You have a pretty strong mandate and remit from the Chief Executive, John Lee, to get this thing going.
I think is to bring the best possible visiting experience to all kinds of visitors in Hong Kong, to show them what Hong Kong is all about and to give them a reason to not just come once, but after coming once, they remember us, they miss us, and come back to be a loyal supporter of Hong Kong.
Hong Kong Tourism Secretary Rosanna Law speaking exclusively with our Chief North Asia correspondent Stephen Ingles there. And of course, you can get an insider's guide to the money and the people shaking up the finance hub in our Hong Kong edition newsletter. It's out every Thursday. You can sign up via Bloomberg.com/newsletters. We've got plenty more ahead. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are going to that lunch break here right now. It's a sunny day out in Tokyo. And yeah, markets are looking okay. Take a look at how the Nikkei is doing. We're up about 1/5%. We did hear from Ueda, also just some authorities there speaking in Parliament, talking about, you know, they might have to shift into some sort of neutral stance when it comes to central bank policy soon. And Ueda saying they can't ignore the risk of tariffs affecting inflation. So you're taking a dollar yen, seeing a bit of strength in the currency. We're at 143 levels this morning. We're watching a few earnings, right? Toyota certainly one.
Coming out in a few hours.
Yeah.
This is going to be interesting given the
tariffs
and, you know, the guidance that some peers have pulled in the industry, not all, certainly. So we'll see. And, you know, anything that, you know, automakers are really at the center of a very complex supply chain of anything, right? So I think it's going to be interesting to see how, and especially also what they say about the currency. You know, move in the yen tends to affect Toyota quite a bit because, of course, of the global footprint it has. And we've gone from about north of 160 in the previous quarter to now closer to 140. And if you look at swaps, for example, and some of the risk reversals, it does seem 130. It's a question mark might be ahead, and how they're guiding as far as their currency assumptions are concerned. But let's play games. Yeah, because they're all related when it comes to tariffs, right? And Nintendo certainly is caught in the storm of when it comes to this trade war. You know, you look at the stock, though, it's doing quite well. It's been on a record run. But there is these headaches around the Switch 2, right? How are they going to do and deal with these tariffs? Are they going to have to raise prices to counter the fallout from these levies? That certainly is going to be questions that analysts are going to be asking the company. But yeah, everyone's been waiting for this long-awaited device to become the fastest-selling console in history. But yeah, the earnings should be pretty good, the best earnings in years because of the Switch 2. Yeah, are you excited, Dave? I haven't played Nintendo actually in a very long time, but yeah, I'm excited. Is GTA out? GTA 6? That's the other one I've been waiting for.
Delayed,
oh, that's been delayed. Okay. Everyone's upset. Okay, I can hear it.
I just want to play the new Mario Kart, though.
Okay.
Yeah.
How does it look though? The new Switch, the Switch 2 that's coming out. Do we know?
I don't know.
No. Anyway, okay.
Is that what we're looking at? Okay.
All right. Okay. Sorry. No. So this is Inside Baseball. Yeah, I'm just getting whispers of sweet nothings in my ear here from my producers. Anyway, the chip maker story is really at the center of this, right? So whether that's Nintendo and the autos, and you had a big move up in the Philly Semiconductor Index overnight. I think Nvidia was up as well, 2-3%. We're getting that coming through across some of the APAC-related names here. And this Bloomberg scoop is really at the center of this, that Bloomberg has learned that the White House is planning to rescind some Biden-era AI chip export curbs, which were put in place in the last few days, of course, of the Biden administration. It certainly comes as U.S. and China are preparing for talks this coming weekend. Robert Lee, our Bloomberg Intelligence senior analyst, is here with us to talk us through your initial reaction to the diffusion part, the confusion
around the diffusion.
That's right.
I think, well, the proposal was put forward by the Biden administration in the dying days of the administration. So, you know, arguably it was a little bit rushed in terms of proposed legislation, but there was a very strong pushback at the time, both from the likes of NVIDIA, various other equipment providers, because again, maybe it wasn't the best thought through legislation, and also it would have affected a number of third-party countries who are on friendly terms with America, particularly countries like Saudi Arabia and the UAE, which have, you know, very strong ambitions to grow their domestic AI sector. So it looks like Trump isn't going to enforce the rule, and he's probably going to put forward a more targeted plan, of which China will unlikely remain at the centre. Because obviously it's a two-horse race in the AI sector between China and America. America's doing anything it can, really, to forestall the developments of Chinese firms, but it wants to avoid the collateral damage to other third-party countries because there's still a great market there for American products and tools.
How is it going to work, this framework, then? I mean, you mentioned it's still going to be strict on China, but is this going to be a temporary reprieve for a lot of the U.S. tech giants out there, like NVIDIA?
I think so, and that's why you've seen the rally overnight. And even, I think Jensen Huang, I think it was even this week, said that he saw a $50 billion opportunity for AI chips in the China market. Obviously, given the recent banning of H20 chips, you know, there's a big question mark as to how NVIDIA can effectively address that market. But I think there are various plans in the offing, potentially. Some may be involving a way in which NVIDIA could potentially license its technology, you know, with the blessing of the administration. So I think, you know, still there's a huge market for these chips in Asia and in third-party countries. But, you know, AI is still the flavour of the month. The Gulf in particular are very heavy investors in AI. They're looking to invest, you know, literally trillions of dollars on a 10-plus year view, particularly if you look at a country like the UAE. So UAE is very keen to avoid that collateral damage.
And it's you know, the news flow is fantastic scoop. Unsurprising, though, given that, of course, you know, the president is headed to that part of the world coming soon. Can I talk to you about ARM and the forecaster? Just your thoughts on that.
OK, so in previous years when ARM was a UK-listed company, it was seen as a canary in the coal mine because essentially they're licensing designs into the industry which are then used to develop a future generation of chips. So what ARM said last night, their guidance disappointed. It was only towards the lower end of the consensus range. So that was one thing. But I guess, again, unsurprisingly, they neglected or they didn't want to give fully a guidance given the, you know, huge number of uncertainties out there relating to tariffs. That's in common with many of their peers at the moment. Nobody really fully knows how this is going to play out. But still, given it's as I said, it's a barometer for the health of the chip industry. If you've got a major design company who not giving guidance, I mean, says a lot about the state of the industry, the total lack of visibility that most companies have on the second half. And that's something you've heard from Samsung, Hynix, and others in the sector.
Robert, thank you. Robert Lee there, our Bloomberg Intelligence senior analyst. Let's take a look when it comes to a trading debut in Hong Kong here today. Shares in Chinese tea chain Auntea Jenny are surging in the first day of trading here in the city and adding to the company's founders to a growing list of billionaires who found their fortunes in the tea drink boom. We spoke to the CEO, Shang Weijun, about its overseas expansion plans.
So far, we only bring one of our brands, Auntea Jenny, to overseas markets, which focuses on products priced at around $2. So far, we have launched about 30 stores in Malaysia. At the same time, we will soon open a direct operated store in New York City. Our teams in Europe and South Korea have also been formed.
Let's get to our Bloomberg Wealth reporter, Diana Lee, now. She joins us here in the studio. There's so many out there, but just tell us specifically about this one brand.
Yeah, exactly. It's insane to think about how popular bubble tea can get in China. It seems like it's never enough. And we just have the founding couple behind this Auntea Jenny brand that just went public and they become billionaires overnight. And yeah, so about this brand, just like many other rivals, it wants to specialize in the lower tier cities in China, which means they're fast growing, but they're less economically developed than big cities like Beijing and Shanghai. So, yeah, and even that strategy is getting a lot of competition these days because even within those lower tier cities in China, you will see a lot of other brands. For example, we've recently covered, Chee, which is a brand that just went public in New York last month. We also have competitor like Nishui Group that went through a Hong Kong public offering, and both of these stocks are doing pretty well since the IPO, and their founders also, the fortune really swelled right after. So yeah, it's really interesting to see how this competition plays out between all these rivals.
Yeah, and grooming as well. So what should we be paying attention to as far as the next chapters of competition now that they're all armed with so much money?
Yeah, so after like a decade of rapid expansion, the competition is really fierce within all these bubble tea brands. And if you go to any big, even not big cities, like any Chinese city these days, you go to the shopping malls, you go on any street, there are so many different bubble tea brands with so many different products. So it's inevitable that some of the bubble tea brands, they actually slump after the public offering because investors are getting more and more worried about, pouring money into such a saturated market. But in terms of Auntea Jenny, or in terms of any bubble tea brands, it's important to have a differentiated product offering or pricing strategy or even supply chain channels just to stay in the market and not be forced out of business. Because we do see that even though some of the bigger brands, they still are having expansion plans, especially their overseas expansion plans. But we do see some smaller brands, they have to close down their stores amid the competition and also amid the slower growth of the Chinese economy. So, yeah.
You wrote in your story, it's almost inevitable that they have to go overseas, given the competition domestically. What are their overseas expansion plans looking like right now?
Yeah, so it's definitely inevitable to go overseas. And for Auntea Jenny, it's one of the important steps for them this year. They are currently primarily focused on Southeast Asia. They currently have 30 stores in Malaysia, and they're planning to expand to about 100 stores in Malaysia this year. They also have some plans to expand to Australia, to Europe, to South Korea. They're also planning to actually open a new store in New York next week. And you see that bubble tea is really becoming like a global phenomenon more than just a Chinese phenomenon. And in an interview with Bloomberg, the CEO told us that he thinks that he can draw inspirations from how Starbucks gained massive success after entering China as a coffee brand, even though the Chinese people are traditionally known for, liking tea instead of coffee. So he believes that the Western consumers are going to be more as open-minded as Chinese people, how they accept coffee.
Yeah, there we go. First flagship store in New York next week. Yeah, look out for Auntea Jenny. Diana, thank you so much. Diana Lee there, our wealth reporter. Plenty more ahead here on the China Show. Futures, U.S. futures are up 0.5%. We're near session highs there on the back of these progress on negotiations and these trade talks that are this announcement coming through later out of the White House. Plenty more ahead. This is Bloomberg.
Well, Chinese President Xi Jinping has arrived in Moscow for commemorations marking 80 years since the end of World War II in Europe. Now, that comes with Russia and Ukraine exchanging airstrikes against each other's capitals. Let's bring in our China correspondent, Mello, on what to expect. I mean, this has got to be a pretty awkward situation for President Xi to land in Moscow against the backdrop of these airstrikes.
Yeah, it is. And I mean, not to make light of the situation in Ukraine, but it looks like President Xi's trip to Russia is now becoming this political backdrop for, both sides to wrangle for more influence for Ukraine and Russia, because President Putin had declared a 3-day ceasefire during this May 9 parade, which is when they commemorate the Soviet Union's victory over Nazi Germany during World War II. But Ukraine has dismissed that and said it won't be able to guarantee the safe passage of these dignitaries that are landing in Moscow. So you have the Slovak Prime Minister complaining that he couldn't have safe passage over Estonia's airspace. President Xi, of course, landed safely, but this comes as he made no mention of Ukraine. We know that China has not publicly condemned Russia for the situation. President Xi had penned an article in Russian newspaper calling for both countries, Russia and China, to defend international justice and fairness, and also said that both countries, Russia and China, have mutually supported each other's core interests interests. Again, without naming Ukraine, he named Taiwan instead. He said Russia has always supported China's one China principle, that Taiwan is an inalienable part of China. And he said we're not only commemorating the 80th anniversary of Russia's win in World War II, but also the 80th anniversary of Taiwan's restoration to China post-World War II as well.
Okay, so what else is on the agenda?
Yeah, he's there to meet with President Putin. He'll be discussing trade and energy issues as Russia faces the threat of the EU potentially severing their energy ties with Russia. We know that Russia has been diverting a lot of its energy supply to China, while China provided that economic lifeline amid those sanctions. Of course, China and Russia also discussing closer cooperation under the BRICS framework and the G20 framework, and also discussing U.S.-Russia relations. So this is really a symbolic show of their united front, right, along with the 30 or so other leaders that are gathered in Moscow to show they have friends around the world to defend this multipolar world order, even despite the U.S. overtures to Russia so far to try to wean off Russia's reliance on China.
Min, thank you so much. Min Low, our China correspondent there. We're looking at cable right now. You have cable, you have FTSE futures, U.S. futures, and also, in fact, when you look at equity markets here in the region, have now swung into marginally the green. I'm being very generous there. But yes, that's the color you still see on your screens. That is after this report, well, two things, right? The U.S. president posting on Truth Social that they're set to announce this major trade deal, and the report out of the Times.
Yeah, the New York Times is saying that that country is going to be the UK. Obviously, we're still waiting for the details. We're not sure what this agreement really means. It might be just a framework deal that will serve as a kind of a starting point for further negotiations. But yes, so far it has buoyed these markets, right? But we're still watching to see, right? Because that 10% baseline rate on tariffs, that still includes the UK.
Yeah.
So we got to wonder, is Trump willing to really backtrack on some of these tariffs and negotiate these tariff rates below that 10% rate? That's the key question next.
Yeah, because so far he said also as it pertains to China that he's not willing to remove that baseline so far, which was a prerequisite or precondition as far as the Chinese were concerned. Right, just very quickly to mark what's been taking place also in Taiwan, that the central bank has said it did not target a specific level for the Taiwan dollar. The context here is the central bank governor was or is, in fact, still maybe speaking to lawmakers there on the back of just everything else that we've seen this week. He is reiterating to lawmakers that the U.S. did not ask for a stronger Taiwan dollar, adding that he was not lying about that. There we go. Okay, that's interesting qualifier.
He had to make it clear.
Yeah.
He wasn't lying. All right. A top Singapore diplomat, meanwhile, has warned that there is no clear roadmap to improve ties between the U.S. and China in disputes over everything from trade to Taiwan. Ambassador-at-Large Chee is a former envoy to the U.S. She told us the speed and scope of President Trump's policy changes has been a shock.
President Trump candidate Donald J. Trump ran on the promise of disruption, and he laid out all the policies that he said he would do, and he did exactly that. But still, I think most of us were shocked, and some were awed. Why? I think it's because of the speed in which things have happened, the speed, the scope, and perhaps the extent, and that has really surprised everyone.
If you take a look at Europe, it is building its own defenses. It's increased its defense budget, for instance. If you take a look at South Korea, it's thinking about going the nuclear way. How are you looking at whether or not these countries will undo the measures that they're adopting at this point in time?
I don't think many of America's allies and partners see America as a foe, even though they are very uncomfortable with what the United States, the policies seem to be portending, the tariff war and so on. What do countries do? They try to bargain, talk their way out, see whether you can land at a different space. Because President Trump has been unpredictable, there's reciprocal tariffs and he pulls it back 90 days and so on. So the question is, in the end, who is the target? Are all these countries target, or is it just targeted at China? And countries are doing different things. But it is true, you are right, in terms of defense, President Trump has in fact indicated that he wants to deconstruct the order that America has created, that countries should not expect a free ride on American defense and assistance. And in a way, we have been free riding, so countries can expect to pay more. I think that will happen. And so there's some adjustment there. But I think you see hedging. They're not foes, but they'll hedge. They hedge in different ways.
You talk about hedging. Does hedging involve getting closer to China? Have you seen that? Do you expect that?
Hedging will, well, countries at the moment is only 100 days, all right? And people are
quite a good indication of what can be expected in the country.
Yes, I think but you know, there are many countries that are still just trying to deal with the tariffs immediately. You know, they haven't moved to the next phase yet. So, and it seems now, if you look over the 100 days, the countries that dealt or are dealing with President Trump, the United States, with some calm and in a collected, poised way, seem to be having some effect. Show strength and you'll be respected. So there's a bit of that. You know, if you look at the cases, Mark Carney, you know, Claudia Sheinbaum in Mexico, you know, so countries are remaining slightly calm. And President Trump, you know, he listens and sometimes he changes his mind. So that can happen. You know, so coming back to your question, you know, then what will they do, you know? So I think in terms of whether they will move towards China immediately, there are signals. China is talking to Europe. Europe is talking to China. What I think has changed most is that what President Biden did, which was to collect all the countries in Europe, gather the Europeans in a kind of coalition, a loose coalition to balance China, to counter China. I think Europeans are now not going to go there.
There we go. That was Singapore's Ambassador at Large, Heng Chee, with Haslinda at our New Voices event in Singapore. Plenty more ahead.
All right, so here are some of the corporate stories that we're tracking for you today. HSBC is offering a new loan product to U.S. companies struggling to cover the cost of President Trump's tariffs. The bank says it's extending its trade pay platform to directly cover the costs of increased expenses involved in shipping products into the U.S. A non-executive director of Pop Mart has emerged as a mystery seller of the company's stock. A Hong Kong exchange filing reveals Tu Zheng sold almost 12 million shares since last week in 3 block trades, taking his stake in the company to zero. Pop Mart's Labubu dolls have become a global phenomenon, setting the company's market value soaring above the likes of Mattel and Hello Kitty's owner, Sanrio. So bigger than Hello Kitty, bigger than Barbie, Dave.
Which means it's also bigger than Ken. So just some numbers there. Sanrio is about a $10 billion company. Mattel is about 5. Yeah. Pop Mart is 31. Oof. 31 billion. 31 billion.
Yeah, shares are down about 3.5%. I think it's down for a third straight day already.
Yeah, down about 10% about this week because of this. Yeah. But yeah, mystery seller, mystery in the box, right? Isn't that the appeal?
Yes.
I think our editors tried to be creative with that. Anyway, let's talk about the macro now from mystery. No mystery here. The Philippine economy missed its growth forecasts as it reported its GDP numbers this hour. In fact, 5 in the 5 handle there. And this comes on the back of lower inflation, which I guess really speaks to why the central bank is looking to then increase its support of the economy as inflation and growth continue to point to a downward slide there as well. Right. Speaking of central banks, we have the Bank of England later today, and it's become slightly more complicated, or maybe slightly even better, actually, given the prospect of a trade deal there.
Yeah. So it looks like, according to the New York Times, that it is the UK that made this major trade deal with the US. We're just about 11 or so hours away from that press briefing. We have plenty more coming up from Insight with Aslan Min.